So today we'll talk about MineHub's Q3 numbers. I know I'm a little bit late on that, however, I only had time to look at them now. In any case, before we begin, as always, nothing in this video is investment advice, okay? And with that, let's start. So, in this spreadsheet, I've been consolidating MineHub's numbers quarter after quarter in order to visualize the company's progress. So regarding revenue, as we can see here, it dropped when compared to the same period in 2024. Now the question is, why did that happen? After all, shouldn't MineHub's revenue be increasing instead? So I asked the company about that, and their response was that quarterly revenue was lower, in part because of a non-recurring project in the prior year, in 2024, but also because MineHub has a customer that was very affected by Russian aluminum sanctions. So that's why revenue dropped. Now moving on, regarding gross margin, as we can see here, when compared to the same period in 2024, gross margin decreased, going from 29.6% to the current 26.3%. So, of course, I don't like to see that, but that happened because at the current revenue level, gross margin is still very sensitive to any difference in the cost of goods sold. So, in the end, what will really make a difference here is the company signing more paying customers. That's what will change the game. In other words, we need more paying clients. We need revenue to grow. And you see, many people, when they look at MineHub, they complain about their current gross margin, which is indeed very low, right? I'm not disagreeing on that. However, investing is about the future, is not about the present. So, what I personally expect to see here is a 60% plus gross margin once the business becomes more mature. Yes, they are still far from that, right? Today, MineHub is showing a gross margin of 26%. However, let's always keep in mind that we have a ton of companies testing MineHub's platform. And well, to me at least, it's just a matter of time before more paying customers finally arrive. Once that starts happening, I expect gross margin to expand. Now, moving on regarding operating expenses, they came a little higher, as we can see here. But you see, I'm not going to talk about details here, okay? Because in the end, the bottom line is this. They are still negative. They are still showing a huge operating loss. And of course, they're also showing a huge net loss, right? However, we all know that. In the end, what needs to happen here is that more paying clients need to arrive. That's it. It's simple as that. So the key question for me now is, how much time can the company hold on? How much oxygen do they still have left? How long can they continue operating? That's what I want to know. So as we can see here, MineHub has burned about 1.2 million Canadian in operating cash flow in the last quarter. However, over the last 12 months, MineHub has burned 6.5 million Canadian. Now, assuming their cash burn will continue at the same rate, at the same pace, how much time do they have? So to answer that, let's now look at their balance sheet. You see, MineHub's balance sheet is currently very clean. And why do I say that? Because as we can see here, the company basically has no non-current liabilities, right? Basically zero. And when it comes to current liabilities, here, current liabilities, they stand at only 1.7 million Canadian, around that. Meanwhile, however, as shown here, the company holds about 2.2 million Canadian in current assets, of which 1 million is in cash. So that means that MineHub could easily pay all its liabilities, right? The cash would be enough for that. However, that's not the only thing the company needs to cover, right? After all, MineHub still needs money to keep operating, since the company is still burning cash. So the question is, where will they get cash to continue operating. Well, if you look at the company's latest results and scroll down to the end, to this section here called Subsequent Events, you'll see that at the end of 2025, the company raised 7 million Canadian, here 7.2 million Canadian. So they raised that money through a private placement. So with that, the company is now able to fund its operations for another year, which is great. So for those who thought that MineHub was going to run out of cash, let me tell you that this is most likely not the case, at least for another year in my view. However, there's one more positive point, which is this one here, warrants. MineHub has around 20 million warrants outstanding, with an average exercise price of 44 cents. Now, considering MineHub stock is currently trading at around 85 cents, that means that all of these warrants are in the money and thus could be exercised. Now, I'm not assuming that all of the warrants will be exercised. However, if that were to happen, that could bring an additional 8 to 9 million Canadian to MineHub's balance sheet. So with that said, I'm not worried about MineHub's ability to continue operating. Instead, my main concern is related to the arrival of new paying clients, of new paying customers. In my view, that's what really needs to happen for MineHub to move forward. Customers need to move down the sales funnel. And honestly, with that said, I think we've already covered the main points from the latest results, at least the ones that mattered most to me. In any case, that's it for today, and see you next time.